Wall Street was looking for a pretty quiet Friday until some trade headlines seemed to throw a monkey wrench into that plan. Well, let's get more from Ken Kamen. He is the president of Mercadien Asset Management. So the Chinese delegation deciding they don't want to go to a farm trip in Montana, that's enough to move the markets?
I'll tell you what, if you ever wanted a headline to show the absurdity of what's going on with today's trading, particularly probably with the algorithmic trading, that as soon as these algorithms hear anything negative, trade, negative, they start firing off. I mean, a low-level delegation that had visit in the works as a goodwill mission to talk to some farmers, and I'm not in any way saying that that's not worthwhile to go talk to farmers, moves the markets. I mean, I think we all need to kind of recalibrate what's really big news here when we're looking at major issues, whether they make a trade deal on a trade visit on a late Friday afternoon, maybe shouldn't be a big market mover.
So let's take an eagle-eyed view of this market, right? So we got the S&P 500 just about, let's say, somewhere between 0.5% to a full percent below, pretty much setting a new record high. What gets us there, A? And B, once we get there, can it be sustainable?
Well, I'd like to maybe just challenge the premise of your question, which is what gets us there to a new high. I don't know whether we need to get to a new high right now. Wouldn't it be great if we just actually consolidated around these highs for a while without having some of this volatility to let it sink in that the economy is doing much better than a lot of the naysayers were saying over the summer. The Fed just lowered interest rates, and now we're going to wait to see what the next kind of signaling is going to happen from all these Fed governors out next week talking. So I'd be thrilled if we just consolidate here for a month or so. I mean, historically, Octobers have not been all that friendly to markets. So whether we break out to a new high here or not, I'm not that concerned. But I actually do think that between here and the end of the year, while we'll probably get some sort of negative news that scares everyone, I actually think we're going to end the year higher than we are right now.
So now tell me, if we take a look at the recent spate of data, you know, industrial production came in nicely. Consumer sentiment is on the rebound. Retail sales holding steady. It looks like all of the doom and gloom that we saw in August and September about the economy and a recession are overdone. Are you ready to say that those fears were overblown?
Well, I've been saying consistently on this program that I think that people were really getting a little bit ahead of the facts because it was very anticipatory, this idea that we're going to get a potential recession yet next year or the year after, and they were kind of bringing that angst forward. I don't see that weakness that people are seeing, and I'm in the camp that I'm not so sure that the Fed really needs to do the cutting that they've been doing. Now, when you look at it in the backdrop that we are now the high-yield bond of the world, and everyone is sending their dollars here, I get that, but it shouldn't be the Fed's mandate to figure out what other economies need to do to create any kind of earnings. So, no, I think that it's not that it's an all-clear sign. I just think things are chugging along in a pretty healthy way, and there's nothing to really be fearful at the moment.
Now, tell me a little bit. You mentioned that we have Fed speakers that are going to be speaking next week. I counted there are 10 of them speaking next week. Some of them are speaking twice. In terms of what you're looking at next week, what will you be looking at to make any kind of investment decisions?
Well, unfortunately, I'm not looking at anything that they say because what winds up happening is we get this push and pull. We had 4 or 5 Fed governors say one thing, 4 or 5 say something else, and then we get a lot of punditry talking back and forth. Well, what did this one mean, and which is the one that was the most important? So I think that right now we're just going to get the idea of what people are actually thinking, but I don't know if that really makes a difference of what's going to happen in another couple months during the in the next meeting. So no, I'm not really waiting on bated breath because it's turning out to be more and more of a non-event. And we all kind of know that we're somewhere around the low of where they're going to go for a while. Maybe we'll get another 1/4 point. It doesn't look like they're going to be raising. So I ask you, what could they possibly be saying that's going to freak everybody out?
So are you considering it noise, these Fed speeches that are coming fast and furious?
I hate to tell you, I've always considered it noise because the market just looks to hang on any piece of news that they can get. While we're waiting for big and real news to happen, to me, big and real news happening is that the President of the United States and the President of China shake hands and said, we got this thing figured out. That's big news that people should put into their portfolio one way or the other. But this jibber-jabber back and forth about what may and may not happen and what someone's opinion is, that's always noise.
All right, before I let you go, I know you want to talk a little bit about Facebook. Mark Zuckerberg, the CEO, has been on Capitol Hill for 3 days talking to lawmakers. What should we make, or what should investors make about this trip?
Well, what's interesting is that it's being covered as that the lawmakers are kind of in some way taking him to task, and I actually think it's the other way around, as we were talking earlier. I mean, Zuckerberg's on Capitol Hill to almost beg for the industry's benefit to start getting some regulation so they can get some guardrails to know what they can and cannot do, because now there's so many things that social media is changing in our society, in the world, in our economics, how we live our lives, and you could throw a dart at all the things that and hit anything that they're doing wrong. So I think that the industry in general is looking to get some guidelines, and it's up to Congress here, or as we saw in Europe, they started doing it last year, to start putting some guide rules in. And then I think the industry could then say, okay, now we're at least complying with something. So I think he's really there more for his purposes to get a rule than to be spanked by Congress saying, we need to do something about you.
All right, Ken, we got to run there. Ken Kamen is president of Mercadien Asset Management. I'm Conway G. Gittins, and this is Reuters.